Okay, so very good morning, guys. Welcome to the briefing then for Tuesday, the 23rd of August. Already seen a fairly decent amount of price action so far. You know, this is a really important lesson or practice to get yourself into, is the preparation at the end of each trading day. You should look ahead to the following day's calendar, and then you can identify pretty much, do you need to be in early enough to get yourself all set up and ready to then trade any pending important economic data. As you know, at the end of the European session, I'll run through the calendar of the next day, and I was pointing out the importance of these data points that came out this morning. You know, these are the preliminary August readings, so they're always the most important ones, and these are tier 1 data sets out of Europe and almost carry a more important emphasis this particular point in time because of people closely watching European data for any potential slowdown felt from the Brexit. You know, if you remember around 4 or 5 weeks ago, that was a big concern by the market, was the, you know, that kind of word contagion you were reading about, was about, is Europe going to slow considerably because of the slowdown that's inevitable in the UK economy. So these data points are important, and these are the sorts of things which as an experienced trader you're kind of looking ahead the day before to plan accordingly. So as such, the way the data kind of works as well with these numbers, because you get the various European countries come out one after another, it's normally the first one which has the most market impact. So by the time we get to the European release, it's pretty much non-market moving. That's because it's basically a composite, a summation of the various individual countries. The fact that the German and French figures overall as a complete data set is fairly mixed. I'll be expecting the same from the European data, and therefore probably the likelihood is only a small reaction. But certainly on the French numbers this morning, you did get a bit of a move. Just looking at the euro here, first of all, the data came out at 8 o'clock, so that was that candle there. We moved, decent move higher. First of all, met a bit of resistance around that R1, and then before moving slowly higher in the following few minutes. I know certainly one of the guys just moving over to month 2, Tim, nice trade on the CFD. Again, I think if it was one contract in and out pretty quick on the back of data, locking in the profit, so a nice trade. In fact, just putting in a bit of context from a statistical point of view, that French number is actually the highest that we've had since October of 2015, as you can see there. So it's actually a very robust reading. And again, if you are trading these economic data points and you've got time to prepare thoroughly, then when you're listening for like the consensus reading, so for the composite was 50.4, so that's the number kind of locked in your head, which would have been around here. And then you're kind of thinking, well, if we get above 51, then we're talking about the highest levels we've seen since mid to late 2015. And therefore, it's going to be a stronger kind of, let's say, potential buy signal for you because it's broken out of the recent data range. So these are other ways as well in which you can interpret data and prepare in advance into whether you're going to action a trade, because like what was good about Tim's trade is that he took it with conviction and took it quickly, but was also proactive in taking it off. Just seeing if the German figure didn't quite live up to the same kind of standard as France. This is the German reading, so pretty much tracking still at the May-June levels. It was quite surprisingly strong on even post-Brexit. Actually, last month, this is the composite, so the combination of the service and manufacturing. However, it's come kind of back to the trend that was seen prior. This does follow on as a trend, though, throughout the session, because later on this afternoon you get the US manufacturing PMI at 245 and new home sales later on this afternoon. One of the other things, though, to focus on from yesterday, undoubtedly what was kind of the biggest move was crude oil. Just taking a quick look here from the opening of electronic trade from Sunday evening down to where we were at the lows, which came really during the Asia Pac session. There's around a 5% fall in crude oil. It was actually the largest decline that we've had in a number of weeks. And the surprising thing was, though, that although oil got hit quite hard yesterday, the S&P actually finished pretty flat overall. So despite the energy stocks coming under pressure with a depreciating price of oil, it actually failed to impact the price of the S&P, which I think is quite an important correlation, because last week actually they were quite tight. They were following one another almost, and so seeing that break down slightly on Monday, and it would be something just to be mindful of today, because the difference between today and yesterday is we've got a couple of calendar let's say catalysts which could spark a bit of direction, whereas yesterday we didn't really have anything. A quick recap on those major three fundamental themes which certainly weighed on crude yesterday. One, the Niger Delta Avengers talking about a potential ceasefire with the Nigerian government. Iraqi oil output looking to increase by around 150,000 barrels per day. And then the US rig count we saw on Friday evening up for an 8th consecutive week, up 11 of the last 12 weeks. All coming into kind of play in combination with potentially, I guess if you're looking slightly longer dated here, that pullback that we've had is very small when in comparison to the run-up that we've had since the beginning of August, which was, put us into bull market territory on that move alone. So in the context of things, maybe just a bit of a natural point of profit taking is just shy of the $50 handle. Certainly in terms of the previous futures contract we were trading. Quite an interesting comment though I have seen in regards to oil this morning. Goldman Sachs, they've said that OPEC and some producers from outside the group may agree to freeze output during the informal talks next month. Remember, that is taking place in September. Their formal talks don't take place, the scheduled ones in Vienna until November. But Goldman said it could prove self-defeating because it would benefit other suppliers if they try to basically freeze output. It comes with US oil rig count up 28% since May. So if they do come to any type of agreement, obviously that's only going to make prices go higher. That's only going to mean probably that US production continues apace, more operational rigs come online, and that's only going to kind of be self-defeating for the market share of the Middle Eastern names, i.e. Saudi. So, probably another reason why you're not going to see actual action when they have those informal talks. As we've been talking about the last few weeks, it's kind of the verbal intervention seems to have done its job by a pretty strong amount since certainly the beginning of August, having gone from sub 40 up to close to $50. Quick look at other things that we've had this morning. You did have last night, or I should say yesterday, German Chancellor Angela Merkel said that the European Union needs to show it can prosper without the UK, as she and the leaders of France and Italy sought to chart a way forward for Europe. They had informal talks yesterday, just looking to show their commitment between each other in the post-Brexit world. Nothing really too concrete there. Another question as well that just to address that I've had already this morning, and someone did ask me last week, is about the South China Sea, because we keep seeing fairly, I guess if you are quite new to the markets, you're seeing headlines such as Vietnam positioning missiles into the South China Sea as a protection measure against hostilities. We've just had Russian warships will join elements of China's navy and military exercises in the South China Sea next month as tensions continue to rise over Beijing's territorial claims. So first of all, a quick bit of background on this situation, and it'll probably make a little bit more sense. It comes amid heightened tensions in the region after the International Court of Arbitration last month rejected Beijing's claims to sovereignty over the virtually the entire South China Sea as illegal. So what did China do in response? Well, they stage almost continuous series of live fire drills and air exercises with more than 300 ships in the region. That's pretty much how the Chinese roll, to be honest. And who do who wants to join in on that type of stance against the Western world if they try to dispute the sovereignty of their islands? Well, Vladimir Putin, Russia, pretty quick to join in the fun, and so that's why the Pacific Fleet of Russia is also joining the People's Liberation Army of China. So the history of those islands goes back a long way. Always contentious issue between the Chinese and Japanese. So from a market moving point of view, these types of news stories generally are not factored in for energy traders. Not unless the situation escalates significantly, and let's say if a US naval ship was then to come into the fray, certainly that would raise a few eyebrows and certainly start to be watched by energy traders. And then certainly if there's any type of firing of missiles as a threat, maybe not to a specific target, but at least just firing as part of an exercise, that also tends to lead to a bit of escalation and potentially movement in oil prices. So potentially something to watch, but not something which I'll be expecting to move the market at this point in time. Just to wrap up, a quick look at the calendar then. Looking out for the European Manufacturing Service PMI coming out at 9 o'clock. This should be, as I said, not a great deal of movement given we've already seen the France and German, but for future reference, remember, normally it's that first release which tends to set the tone, and certainly it was the French number which caused the most reaction. Now, this is about market expectation rather than what is the most important country, I'd say, in the Eurozone. So it's an interesting differentiator between how we would normally look at data between countries' importance and their value in the Eurozone, because probably Germany pips that, but this is to do with the market needs to kind of rephrase its expectation, and it gets that first from the first reading, which was France. Later on this afternoon then, it's pretty quiet throughout late morning, midday. Turkish rate decisions, really nothing for us to get excited about. That only typically moves the lira. Same case with the Hungarian forint for the FX traders. But then later on this afternoon, manufacturing PMI, new home sales coming out from the US. But you're going to have to wait until after the open on Wall Street till those hit. Speaker-wise though, do be mindful you have ECB's COER as a leaning dove and speaking in Switzerland at 12:30. So maybe just one to watch there on the sidelines. Okay guys, that's your morning briefing. So enjoy your session.